Hello, hello, hello. Good morning, good morning, good morning. Let me see. Good morning, good evening, good afternoon. How's everyone doing? Hello. Hello, SY. Hello, hello, hello. Yeah, I saw SY. I saw. It's all old material, I believe. So it's all right. I'm not too worried about it. Feel free to send a link to info@tradingmt.com as well, and we'll check it out. Let's see. Hello. From Russia, from South Africa. Love to see it. I love to see it. Good afternoon, good morning. Hello, Levi. Hello, Ash. Let's see. How was everyone's week? It was quite an interesting week, I would argue, regarding trading right here. It's quite a, I'm not sure how to summarize it. A lot of fake outs, you could argue. A lot of where it seemed like something was happening, but it didn't happen. Except for gold, actually. Except for gold. Gold was quite interesting because gold just kept running and running and running, which was quite all right. But other than that, NASDAQ and ES, moi. Hello, Festus from Texas. Good morning. Good morning. Good morning. Let's see. Yeah, gold was quite crazy. Quite crazy. Let's see. If we zoom out here to the monthly time frame or the weekly time frame as well. This is a haven't had a bearish weekly candle in how many bars? Let me see. In 8 bars in 8 weeks. So the past 2 months have only been bullish. That's pretty crazy if you ask me. Not a singular down candle. How crazy is that? Hello, Francesco from Italy. Hello, hello. Red week for me. It was a break-even week. I took a win on gold, which we'll dive into as well, but I also took some losses on NASDAQ. So it was a little bit of an average week. Not great. Not that bad. Let's see. Yeah. There was some interesting price action flow, in my opinion, on Euro US dollar, which we can dive into as well. There was some interesting price action there. But other than that, let's see. If there's any topics you really want me to dive into as well, then feel free to let me know. Of course, we're going to dive into forecast, but we're also going to dive into a couple of topics, etc. We'll see. Let's just start off with the forecast. Let's see. Okay. And afterwards, I'll ask the same question again. If you do want me to dive into any topics, then feel free to let me know. Let's first just dive into the forecast right here. And then we'll see from there where we're heading. Okay, perfect. Let's see. Next week's economic calendar, again, what is important to understand is really only the big 3 news event at this moment in time. Because even with a very thin economic calendar, where there's not a whole lot of events, it's still quite interesting to get involved because the volatility is just there. It's just there. The volatility works very different as well. So, for example, last week, actually, a lot of people right there assume, for example, that Monday is going to be a Monday. Don't get me wrong, right? It's a bank holiday. Should ideally be somewhat careful. We're going to dive into gold because gold repeatedly has been very interesting in the past few weeks at the open, which we mentioned also in the last forecast. So it's something to pay attention to. And the volatility is then not really a problem because the volatility is not really following the economic calendar anymore. So, of course, still take into account that we have CPI right there on Friday as well. So that is quite important. Other than that, it looks perfectly fine. Slowly approaching daylight saving time shift as well, which you'll see at the bottom right here. Again, if you just have your time set to New York time, then you'll be fine. Nothing to worry about. Actually, see, next week seems to be quite filled. Okay, interesting. Here we have FOMC statement actually. FOMC statement, CPI, and if, no, it's still tentative, so it will probably move right there. Okay, still in shutdown. All right, perfect. Let's dive into the market. This is a list right here, futures and stocks, which is my main trading list. But we're going to dive into this after. Let's first dive into the dollar, into your US dollar, and a little bit of the Forex market right here as well. If we take a look at the dollar, what has happened this past week? Mainly down, let me remove everything right here. Okay, so we still had this rejection from this. That's a nested fair value area right there on the 4-hour time frame right there as well. Okay, then what we see right here is that we have quite a large rejection overall, going back to the fair value area that we have right here, and also the fair value gap that we have right here. The dollar at this moment in time, to me, looks quite bearish right here. And if we zoom in a little bit more as well, we see on the 4-hour, for example, from this fair value area towards the left as well, the daily fair value area, using 4-hour took an objection, that we already have early signs that it is failing to continue lower as well. The main rejection that we get is from this nested fair value gap that we have right there. So what is important, in my opinion, to understand is, again, it comes down a lot to the same thing over and over and over, which makes a forecast quite easy to do, essentially, because right here, okay, we talked about this quite a lot last week as well, on Sunday. What is important to understand is that we need parameters, right? So there's many different things of what price action can potentially do. We could just skyrocket higher from here. We could also just, well, completely fall off a cliff and continue lower right there. All things that could potentially happen. But if we assume that these PD rays can push price higher and these PD rays can push price lower right there, then what is important to understand? That we can potentially continue lower from this fair value gap right there. Could even have a sting back into that higher fair value gap right there to then continue lower as well. Or we could continue the rejection that we see from this fair value gap to then continue higher right there. It's the main two options, in my opinion, of what we're seeing at this moment in time. Okay, so how do we know which one is going to happen? Simply parameters. You're not some kind of Marvel Avengers superhero or anything like that. I think people try to act like somewhat of a superhero when it comes to trading, when they're more involved with their ego than they're actually worried about what trading. They're actually worried about can I make some profit from this move or whatever. And what I mean by that is people try to predict the market with so much ego attached. Again, what is important to understand here is it's just parameters. That's it. There's no fancy algorithm here that's trying to tell you what's going to happen. Just use parameters. You're just going to be better off for your trading. Okay, so right here, what is important? If we have a sting back into this fair value gap right there, can we create a rejection high, excuse me, right there, to then start running it, to then continue higher again? Okay, would be lovely. Or on the opposite side, if we do respect the fair value gap right there, can we run that rejection low to then start targeting, for example, all these lows right here towards the left as well? Right there. Both scenarios, in my opinion, quite interesting. But it's a lot of reacting right here, and especially on the dollar at this moment in time, because the dollar is a lot of up and down, aggressive retracements, etc., arguably on the edge of somewhat consolidating right there as well. So it's quite important to understand. Hopefully it does make sense. If it doesn't, feel free to ask me. Okay, so then, for example, what we took a look at on EU last week right here. Again, this doesn't follow through bearish, right? I don't need to explain that, I hope. So what is important to understand, for example, if we have the dollar creating these large rejections to continue lower, don't look to short, for example, a GBP US dollar from this bearish value right there, because that's not that interesting. Because the dollar is likely going to continue lower right there, and the GU is likely going to continue higher and not lower as well. So this is how you can filter out a lot of bad fair value gaps if they don't agree with correlation. So if the dollar is going lower, again, GU is likely going to continue higher. So the bullish fair value gaps are likely going to be respected, not the bearish ones, if that makes sense. It's quite important to understand. Now, the first fair value gap that might fill right there at that moment in time, not too bad right there. Okay. If we take a look at euro US dollar right here, again, what I think is quite important to understand. Okay. If you struggle with finding trade opportunities, then I would love for you to start doing an exercise. And I would love for you to stop listening to others. So a lot of people think, I don't know why we've been so, but humans in general, we've been we've been taught that the solution is always outside of us. So that means that we always run towards someone. We always go towards other people when we have a certain problem. We always look outside of ourselves for the solution to our problem. And that's not necessarily a bad thing, right? That's why we have education, etc., as well. But if you always rely on that, you're never going to stand on your own 2 feet. And I'm not going to click the button for you. I'm very sorry. So what is important to understand is I always give credit to the person that has achieved it as well. It's all credits to you. When you get funded, it's all credits to you. When you get payouts. Because I didn't click the button for you. So it's all credits to you. So what is important to understand is, again, we want to make self-sustainable traders, not relying on REO traders, not relying on signal traders, not relying on anything. These forecasts are nice, but again, sooner or later, you're going to need to rely on yourself. Very important to understand as well. So what is important right here is that if you struggle to then understand, well, what am I actually doing? What am I actually looking at? All that we're doing right here, all the opportunities are trading in between PDWs. That's all it is. So if you go watch the daily bias video on the channel as well, on this channel, then you'll notice that all it is trading in between PDWs. And once you really, and I'm not just talking about, yeah, REO says this, I somewhat know what it is. No, I'm talking about fully understanding it to the core of your bones, essentially. Once you really understand that, it becomes just a simple game where you're looking at trading in between PDWs, and it's all you're doing because that's where all the opportunities are. So for example, if you mark out, and how does that exactly work, right? Okay. If you mark out all the PDWs right here, that's the first thing you want to do. Just start marking out the PDWs right here. We have a swing low right there, fair value gap. You can even skip fair value area. Order block, you don't really need it in that sense. You can also just use fair value gaps and swing points. So if you just start marking all of these PDWs out right here, then you'll start noticing a certain pattern right here. That we're always moving from PDWs, we're always moving towards PDWs as well. But more importantly, we're always trading in between PDWs right here. So where do you notice, where is price for a brief moment free to move right here? Where do we get these expansion candles right there? Notice these. I'm going to mark them out with a red box. Let me see. These expansion candles right here. Could argue even to continue higher right there as well. These expansion candles right here as well. Where do these happen? Because those are the areas of opportunity essentially, right? Because when price moves very fast towards one side, you can catch that. You can catch those moves right there to potentially continue higher. You could even argue the bearish move right here. Let me see. With this fair value gap to then continue lower. Let me see. Right there as well. Now what is important, you'll notice they all happen in between PDWs. So the moment we disrespect a premium rate, we move towards a higher premium rate. The moment we respect a discount rate, we move higher towards a next premium array right there. That's where all the areas of opportunities are. And that's where, if you go into the lower time frame right here, and I made a video in MMT just simply highlighting this fact. And at that moment in time right here, it becomes, I wouldn't say easy. It becomes quite simple, quite straightforward to catch these moves right there. Find an expansion candle, find a future order flag, target your 1 to 2 R right there, and you're going to be perfectly fine, if that makes sense. But the first part right here is understanding where do you look to get involved. So all it is you're trading in between PDWs. That's all it is. We're disrespecting one PDW, we're moving towards the next PDW. We're disrespecting this PDW, we're moving towards the next PDW. We're respecting this PDW, we're moving towards the next PDW. All it is. All it comes down to right here. So when you understand that, it's quite interesting because then it becomes quite straightforward to be able to catch these moves as well. Okay, if we move on then, for example, to a GU right here, again, if we want to continue lower right here, so for example, the dollar wants to continue wants to continue higher as well. Then what is important to understand that we need to see this survival gap also being disrespected to then continue lower right there as well, which is quite important. Other than that, if the dollar keeps continuing lower and GU then continues higher right here, again, target these next PDAs right there as well. And it's the same, essentially, what it comes down to for an EU right here. It's arguably quite straightforward right here, if that makes sense. And of course, feel free to let me know if that doesn't. Okay, JPY pairs to me, not the biggest fan, not that interesting in my opinion right here. Not that interesting, lots of consolidations right there as well. Rather just take a look at something else. Okay, perfect, let's move on. Let's move on to the futures and stocks list right here. Okay, let's see what we have. If we first take a look at ES and NASDAQ right here. And afterwards, we'll take a look at a Russell, etc., etc. Okay, then an ES and NASDAQ. Past week, quite a lot of higher time frame consolidations right here. So what we mentioned, again, in the past forecast is it's likely that we're going to create this daily survival gap right there. If we start running the rejection high right there, we have quite a clear path now towards the all-time high as well. That arguably still stands, but what we also see is that these are all wicks right here. There's not expansions, no body closes or anything like that. So we create large rejections right here from the rejection high as well to potentially continue lower. Again, these bearish moves right here, to me, are not that interesting. So all I'm looking at on ES and NASDAQ is, can we overtake these survival gaps right there, which we are already doing as well, to now continue higher towards these highs and throughout next week as well, look to reach an all-time high again. What is the biggest enemy of this? That sounds very dramatic, but what is arguably going to stop us from doing that? Well, what we're seeing in this past week, and that is consolidations. So if we do get more consolidations, then it might take a little bit longer. That's not ideal. We don't want consolidations. So what is very important to understand right here is that if you go into the lower time frame right here, you want to pay attention to how price action is actually forming. For example, here, fair value gaps are forming, these fair value gaps are holding right there. This fair value gap is going to tell us a lot as well. Will this fair value gap actually push higher, create a new fair value gap right there? If that's the case, and we don't have any signs of these fair value gaps failing on both sides of the market, and we actually get a good trend towards one direction, ideally bullish right there, then we can look to get involved right there to continue higher, targeting these highs, targeting all-time high as well, right there. That's arguably the only thing that you should pay attention to right there, which is very important. Other than that, again, this does look quite interesting to continue higher, in my opinion, right here. Looks quite good right here. Looks good. I like it. I like it. And it's the same for ES right here. Can we just look for reasons to buy at this moment in time towards an all-time high? But again, the only thing that will stop us from reaching the all-time high, at least, well, it won't stop us forever, but just temporarily, is a consolidation. So if we do see fair value gaps are struggling, we don't really follow through, etc., then it's important to understand, take a step back right there. Quite important. All right. Let's see. Russell, in general, the indices, it's a whole lot of the same thing. Nikkei, for example, right here, actually looks quite interesting to continue higher as well. Towards the all-time high, right there. Some indices are stronger than the others. For example, an FTSE right here, not that strong right here. If we compare it, for example, to a Nikkei, if we compare it to an ES right here. So I would prefer to take a look at, for example, a NASDAQ, which looks quite interesting to me as well. And a Nikkei right there, which looks quite interesting right here to continue higher. I like those. US 30, a YM. It's all right. It's not too bad. Not my favorite though. Same for DAX right here. Not my favorite right here. Okay, let's see. Gold. Okay. By the way, if we touch on this a little bit more, because again, all we're doing right here is more of the same, right? It's just consistently doing the same thing over and over. So for example, right here, what are we doing when this 4-hour fair value gap fails and we target this high? What is that? we're trading in between the PD rays right there, again, to continue higher. When we start running this high to target the all-time high right there, all we're doing is we're trading in between the PD rays right there. That's all we're doing, right? So it's a lot of the same thing. It's consistently the same thing over and over and over, if that makes sense, which is quite important. Okay, gold, very, very, very bullish right here. At least it was very bullish. Let's see if it can keep it up right here. But it was very bullish. Okay, so one of the first things I want to mention as well is when something has been extremely bullish like this, of course, sooner or later, it's going to come down again. But don't try to catch that move, I would argue, unless you have very specific data or anything like that supporting the idea. I would say just look for more buys. So for every retracement that we have right there, if you just got involved in more buys right there, you would have been right most of the time right there. Now, eventually, once the top does settle in right there, you're going to be wrong once. So you might be right. Let's say that is, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 9 or 10 times you're going to be on the right side of the market right there if you just bought again. And right here, if we fail and we potentially continue lower, you're going to be wrong once. Well, being right 9 times and being wrong 1 time, I'll take that every single month, every single year. I would love that for that to happen. But now let's do the opposite right here. If you try to catch every single top and you think it's constantly reversing, you would have been wrong 9 or 10 times, and you might be right once right there. I don't like those odds personally. I'm not a big fan of those odds right there. So that's quite important to understand, in my opinion, that more of the story, I would just like to look to buy again right here. And then if the top settles in, perfectly fine, that's all right. But right here, if we can, for example, overtake this 4-hour fair value gap again right there to then continue higher again, perfect. I would love it. If I'm wrong right there and the top settles in, perfect. I'll just wait right there. Okay, so in the past week right here, we talked about this during the Sunday open right here as well, during the Sunday forecast, last Sunday forecast, where this all-time high became the target right there as well. At the moment this opened, this was quite interesting to continue higher. So it was quite straightforward, the trade right here. We were disrespecting the fair value area, trading in between pre-ways, target the all-time high right there as well. And then here, this expansion candle right there to continue higher as well. Quite straightforward, I believe, the trade ID. Okay. Afterwards, we had a couple of retracements on the 1 hour right here, for example, as well. 1 hour resistance against us. 1 hour, I believe, right there, or no? Not entirely sure. All right. Afterwards, just this 1 hour fair value gap right there as well. And then we had the larger drop off. So this is quite interesting to see if we can overtake it again to continue higher again, or if we will potentially drop off lower right there. Let's see. Let's see. All right. Let's see. If we move on to silver, silver was quite interesting on brief moments right here. So we looked at this trade ID right there on the Thursday live session in the MMT as well, where there was a very interesting trade ID right there. Then other than that, quite a large rejection at this moment in time. So for me, it's very similar to gold right here. Can we, for example, overtake the resistance areas to then continue higher again? Again, if we do, for example, on gold and silver right here, if we do start to follow through lower right there, then what I would want to pay attention to is, okay, can we now start targeting, for example, these lower fair value gaps right there as well? So then it becomes, again, trading in between fair value gaps just for the bearish side, if that makes sense. So that's the thing I would personally want to pay attention to. Bitcoin, okay. Bitcoin has been following through lower, actually, right here. So the fair value gap right there, what I personally was waiting for is, can we run this rejection high to potentially continue higher towards an all-time high again? We never did that. Okay, and we just follow through lower right here. For me, right here, I would like to wait and see what we can do. If we can still continue lower, if we can follow through from these bearish value gaps right there as well to continue lower from, or if we do start disrespecting them to target these highs again. Let's wait and see. But I'm a little bit in between at this moment in time. I'm not that convinced on either side right here, if that makes sense. Then we have stocks right here. Arguably, all of these stocks are not necessarily that interesting at this moment in time, except for Apple. Apple right here is looking quite all right, actually. We're overtaking the daily bearish value gap right there. We need to see for the Monday, for the Tuesday right there, if we are running the rejection high right there. But it looks quite interesting right here to target all-time highs right there as well. It's a very similar all-time high protocol, but just on stocks right here. So on Apple, on all these different stocks as well. Very similar to the indices, if that makes sense. Let's see. Nice trader, Genie. Nice. Great job. Let's see, anything that didn't make sense or anything you struggled with in the past week. Let's see. Let me know. We don't see chart. Okay. Let's see. Can you go deep into that dollar and GU going higher example, which you mentioned earlier when GU went higher? Okay, for sure. So what I think is quite important to understand, because I get this question quite a lot. I get someone, it was here as well. I get the question, Ario, in the past week, the 4-hour values were not holding. What am I supposed to do with that information? With all due respect, am I supposed to what? Like, I need some more context than that, you know. There's so many things I want to say that my brain is starting to struggle. But if you just come to me and, for example, say, hey, Ario, the 4-hour value gaps in the past week didn't work. It's like, yeah, previous week there were also 4-hour value gaps that didn't work. The week before that, there were also a lot of 4-hour value gaps that didn't work. There's so much context going into these fair value gaps actually holding, if that makes sense. You can't just take these random fair value gaps and say, oh, I'm just going to trade from every single fair value gap. There's so much context going into it, if that makes sense. So, for example, a very simple, arguably simple thing that you can apply when you trade Forex right here is look at the dollar and see how it aligns with the majors. So, for example, if you determine that the dollar is going to be bearish right there, and that means, for example, an EU right here is going to continue higher. That, for example, also means a GU is going to continue higher and Australian dollar, US dollar is going to continue higher right there as well. Now, in different tempo, for example, an Australian dollar, US dollar is not that strong as, for example, an EU right there in the past week. But what is important to understand right here is that if a dollar is going to continue lower right there, and you have that bias at that moment in time because these lows, we are running those lows right there, these bullish value gaps are failing right there, okay, and you adjust. So right here, next target becomes the fair value area, etc. Then what is important to understand is going to reflect directly, because it's directly correlated on the majors. So for example, an Australian dollar, US dollar right here, trading from these bearish fair value gaps right there, that's not that interesting, arguably, because the correlation is just not in your favor. Because right here, if you are trying to trade from this bearish 4-hour fair value gap right there, then what are you betting on? You're betting on the dollar to continue higher. That's essentially what you're doing right there at that moment in time. So you're betting on the dollar to continue higher, which if you have a bearish bias on the dollar, can you see how that's a conflict? So then it's very important to understand that these are fair value gaps that you might want to avoid at that moment in time. That's not that interesting to look to trade from, if that makes sense. And if you do want to trade from the bullish fair value gaps, arguably your best bet is then to trade from the strongest. So for example, Euro US dollar is stronger than Australian dollar US dollar. So again, it's quite an important context to understand at that moment in time, if that makes sense. If that makes sense. So for example, the same when the dollar is bearish at that moment in time and trying to trade from bullish fair value gaps right there on the US dollar, Canadian dollar. It's likely not going to play out very well. If that makes sense. For sure. You can use no resistance areas on scalping. It happens everywhere. Absolutely. Congratulations on your funded account. Congratulations. All credit to you, my friend. Let's see. Hello, Marijn. Hello. Can you confirm a PD rate on a certain time frame? Because disrespected with a time frame below the candle, close above / below the higher time PD rate. Usually you can do also one time frame below. For me, that's all right. That's all right. For sure. I always take the dollar in consideration, the Dixie right there, the US dollar index. I take it in, for me, the dollar, the bias right there needs to be clear before I take any entry on the majors. So I'm not comparing it right there on the lower time frame to see, okay, what is happening? Are the exact candles the same right there? But for example, the higher time frame bias for me needs to be clear on the dollar, so the US dollar index right there, before I actually start to look at the majors. And if it is clear, and there's also something clear on Euro US dollar, for example, that's when I take a look at it. If that makes sense. Let's see. Absolutely. 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 Yeah. Hello from Hong Kong. Nice to see it. Absolutely. Let's see. How to spot opportunities whilst trading in between periods? Is there any time frame alignment? You can use the same time frames below. So a lot of these questions, because I see quite a lot of questions, and I'm also trying to push you in the right direction. So I'm not here trying to sit here and say it's a silly question or anything like that. But a lot of these questions also come down to just doing a little bit, like the smallest amount of effort, in all honesty. Because right here, if we trade, for example, in between these PDAs right here, right there, then how can we, or if we take previous price action, right, where we could do the same thing, for example, on Euro US dollar, like we talked about right here, where we trade in between the PDAs right here, for example. Then if you mark out the areas where we have been expanding right there, and again, it's important to understand that the area is repeatable, right? Because otherwise you just mark out random areas, it's quite difficult to manage to see it live. Because right here, we can see it in hindsight, we can also see it in live because, well, it's quite a repeatable area. We're just trading in between periods. So what is important right here is, okay, then just start seeing how you could have gotten involved right here. 15 minutes, 5 minutes right there. What I like to use is, for example, expansion candles right there. Expansion candles covering the order flow lag right there to then continue higher. That's my go-to entry, if that makes sense. So a lot of that comes also down to if you mark out all these different areas of opportunities right there, and you just go into the lower time frame to see how you could have gotten involved right there. And eventually an entry pattern, an objective entry pattern will emerge from that. So it will be very clear, okay, this is the entry pattern that I'm consistently spotting within all these examples. Perfect. That's your that is your entry pattern. And if you then need to go into the lower time frame, for example, if you need to go down time frame, that's perfectly fine. That's perfectly fine. If that makes sense. Is 3 trades per week enough? What do you define as enough? For me, 1 trade a month is enough. What is your goal? What is enough for you? I think if your goal is to be profitable, to make a profit from trading, 3 trades is enough. Sometimes 1 trade a week is enough. Sometimes 1 trade a month is enough. Depends a little bit what your goal is, if that makes sense. But other than that, I would say don't compare yourself to others in that. There's going to be people that take many trades a week. Doesn't necessarily mean that they're doing great. That's quite important to understand. So again, the question is, how many trades per week can you find for your trading plan? That's what I think is the right question to ask. So then it really comes down to your trading plan. How much does it show up right there? That's important. So if that's three times a week and you catch all those 3 a week, perfect. You're doing great, right? You're following your trading plan. That's important. That is important. Let's see. All right, how do you manage your watch list during the week? When the New York market opens, which asset do you observe a lot? How do you monitor all your weekly expectations during the kill zones? So usually that happens the day before. The day before, for example, tonight, I'll start looking at the market again before I go to bed. And then the moment I will outline things, right? So for example, if I go to bed, I will outline right here, okay, we have this area of opportunity. I would want to see a new 1 hour Forex right there to potentially look to enter right there to continue higher, if that makes sense. If I wake up in the morning and that still is in play right there, that's still that what I've outlined, then I'll act on it. If the opportunity is there, if it matches the trading plan, etc. If not, I'll wait. And in both scenarios right here, at the end of the day, I do the same thing. So for example, right here on a Monday evening, I do the same thing. We might be here and then I'll outline, okay, this is the next area of opportunity right there. That's where I want to potentially get involved right there. And then when I wake up, I see where are we at? Are we in that area of opportunity, etc. And based on that, if you do that on all these different indices, Forex doesn't really matter, you'll come to a conclusion, well, for example, on FTSE, there's not really an area of opportunity at this moment in time that's interesting. So then I'll rather pay attention to, for example, an ES. And when I determine that the day before, then the next day, I'm already prepared to know what to do. If that makes sense. If that makes sense. I am not afraid to trade more. No. It's so funny. It's like people have all the wrong mindset about trading. It's so interesting. It's so interesting. Because again, in any business, in any job that you have, the more you do of a certain thing, the better the outcome usually is, right? So it's very, very linear. As in, I'm going to do more of, for example, coding. I'm going to get better at it. I'm going to get a better outcome. I'm probably going to get paid more because of it as well. It's very interesting how people think that the more you trade, the more money you're going to make. It couldn't be further from the truth. Couldn't be further from the truth. It's so interesting. And on top of that, yeah, it's also risk exposure. If you really want to dive into that as well, yeah. So usually what tends to happen is the more people trade, the more they lose. So for example, a lot of people, they start off, from what I've seen, they start off with quite a low trade frequency to find the best trades. So for example, they might trade 4 times a month. For some people, for some reason, that's complete horror. They get scared. They're like, what, 4 trades a month? That's absolutely incredible. 1 trade a week. That's how can you live from that? If your capital is in the 7 figures, with all due respect, with 4 trades a month, if those are 3 winners, you're going to be absolutely fine. You're going to be paying your bills perfectly fine, if that makes sense. But oftentimes it comes from a need as well as trading more because you need more money at this moment in time. That's not going to happen. So usually what tends to happen, these people, they want to increase their trade frequency. What happens, they just increase their losses. And the winners, so for example, again, people take 3 trades a month and they think I need or I want to increase my trade frequency. Why? Because usually an increased trade frequency, right, they think is going to increase their winners without increasing their losses. For some reason, that's not going to happen. I'm sorry. So what is going to happen is you're going to increase your winners, but you're also going to increase your losses. So it's going to balance out. And you're going to be at the same place, just taking 30 trades right now, when you could have gotten the same result by taking 3 trades a month. You just use 10 times your effort whilst having no extra result to show for it, if that makes sense. That's a lot of times what happens. A lot of times what happens, which is quite interesting. Let's see. Yeah, super interesting, Festus. Trading a futures prop firm funded account. So actually in the past few weeks, I've been trying to trade a little bit with Apex Trader funding. So I bought seven accounts of 50K, which I ended up passing as well. So I'm funded with Apex Trader funding as well. But what you'll notice is that if you go to, for example, I'm going to dive into this a little bit. I'm going to rant on this a little bit. If you really dive into futures prop firms, because what I thought, right, is when you go with futures prop firms, you can get up to $1 million capital, for example, with Apex Trader funding for relatively cheap, as in for, what is it, maybe $1,000 US, something like that. For $1,000 US, you get a 100K account with, for example, a CFD prop firm. You get nowhere near $1 million capital. So that's quite interesting capital-wise. But when you go to these futures prop firms, which is very interesting, they really force you to trade a certain way. So for example, I've been really sticking to CFD prop firms and CFD brokers, etc., because that's what I've always been trading in general as well. But I focus a lot on the indices, as you'll notice as well, right there. Focus a lot on futures, on GC, right here, gold as well. So for me, it's a lot easier to execute on, for example, a futures account as well. But what you'll notice is that you will almost have to somewhat change your strategy to fit into a futures prop firm, which is very interesting because that's not necessarily the case when it comes to CFD prop firms. So for example, you have a trailing maximum drawdown. Now, a trailing maximum drawdown is not necessarily the worst thing in the world or anything like that. But what tends to happen is, for example, if you take a trade right here, and let's say this is my trade and I target those highs right there. If I now take my normal 2RR trade right there and I don't use a break-even rule, because according to my data, that's the best thing to do, then sometimes it will happen that something like this happens right here. So now what the trailing maximum drawdown does is it trails to your highest profit that the unrealized profit right there. So right here, you're in very high profit, but you don't make any of the profit, but your trailing maximum drawdown still trails according to that. So your RR gets a little bit skewed because of that as well, which is quite interesting to see. So you actually need to, for example, actually go break even, or you need to even start trailing your stop loss right there as well, which then it goes against what my data tells me for my trading plan, which is quite interesting to see. Other than that, you also notice there's a lot of consistency rules on futures prop firms. It's absolutely insane. So, but all of these consistency rules, again, they come down to a lot of the same things. Well, just consistency, but it's arguably a lot of the same things. So it's quite interesting to see those dynamics between CFDs and between futures prop firms, whereas CFD prop firms, you're a lot freer to do what you want, as long as you still pass the evaluation, of course, and you don't go crazy in your risk management. You're in general, you're quite free to do what you want. Where with futures prop firms, you're really pushed into a corner and they say, you're going to trade like this, otherwise you're not going to trade with us. That's why the capital arguably is also a lot cheaper to acquire right there. So that becomes their whole business model. So for example, with Apex Trader funding as well, which is quite interesting to see, that's their whole business model essentially, because the payout phase is arguably harder than the evaluation phase with a lot of futures prop firms. But the reason why, because a lot of them also, you need to pay an activation fee. So the activation fee right there that you actually pay, well, at least maybe I'm wrong, right? But it feels like that's just the whole business model. They acquire you quite cheap through high discounts. The activation fee that you pay right there, that's the real money that they get, if that makes sense. And they hope you fail and do it next time again. It's quite interesting. It's quite interesting. There's quite a large difference depending on how you trade. Again, if you just trade lower time frame, scalping, day trading, ES, NASDAQ, go for futures prop firms, right? That's your best bet right there. But in a case like me, I like to hold over the weekend. I sometimes like to hold overnight as well. So I don't want to close at every market close when I still have a position open right there, because I'm more so swing, if that makes sense, more on the higher time frame, 1 hour, 4 hour as well, a lot. Then futures prop firms is not necessarily the best thing for me, which is quite interesting. It's quite a large difference. There's a lot of nuances to it. Quite interesting. Let's see. Futures in general are more regulated than CFDs and Forex. Yeah. Especially in the US. So in the US, for example, you'll see that most US traders in general are futures traders, just because it's easier, more accessible than CFDs and Forex, etc. Out of 1 to 10, how will you rate your experience? Well, with Apex Trader Funding, I would say 6 out of 10. It's all right. There's nothing bad again, but 6, because it starts at the start. Because for some reason I was trying to experiment with the whole thing of buying 20 accounts, right? Buying 20 accounts, trading 20 accounts, because then you have $1 million capital if you pass that, etc. with Apex Trader Funding. So I was trying to explore that world a little bit, trying to test it. And for some reason, if Apex allows that, why don't they allow you? Unless I'm missing something, right? And please tell me if I am. I can't buy those 20 accounts at the same time. I need to sit there, click for an hour. I need to click every single account separately, go to the website again, buy a singular account again, go for the next one right there, buy a singular account again. Maybe they do it on purpose. I probably think they do, because I can't imagine that such a large company misses that. So probably they do it on purpose to get you to buy a bigger account maybe. But yeah, that's quite interesting. That's quite interesting. And that's where it started. And other than that, again, it's quite interesting in general, but there's so many things you need to take into account. So you're so much freer when it comes to CFD prop firms, which is quite interesting to see. So I think for the future as well, for my trading plan specifically, I need to find a different prop firm, if that makes sense. But the futures experience in general is quite nice. So for example, if you do trade ES, NASDAQ, and you don't have to compare to your MetaTrader or whatsoever, yeah, that's very nice. That's beautiful. I like that. No, I don't really copy trade. No, not really. So I like to, for example, when I go to prop firms, it's mainly for testing as well, because my main trading account is an investor account. So that's a complete separate account. So for example, I have a funded account with FTMO, I have a funded account with Apex Trader Funding, but it's all for testing mainly. So in Apex Trader Funding, for example, when I do have those multiple accounts, yes, then I do copy them, if that makes sense. I just treat it as one large account. But other than that, I don't copy across them, if that makes sense. Main reason why I do that is generally speaking, there's a lot of risk attached to that as well. If that makes sense. I don't like to treat it as one large account. Let me see. In some cases, son, that is true. That is true. Yeah. Where bump and roll resistance, because bump and roll resistance is still resistant. It's still a target. It's still a PD ray. That makes sense. So a lot of times, yeah, it will be a target. Yeah. Love to see it. Congrats. Nice. Fun it with FTMO 100K account. Nice. Congratulations, my friend. Please talk about how to get entries and let us know how you do it, especially on indices. It's expansion candles. That's really my secret. There's no fancy secret or anything. It's just expansion candles. So for example, if I wanted to get involved right here, it's a second candle for fair value gap. So for example, right here, that candle right there, that's an expansion candle right there, because it expands above the previous candle high with the body right there. So that for me would, for example, be an entry. And then I cover the order flow lag right there, the future order flow lag, because think about it. This is going to turn into, right here, this is going to turn into a fair value gap that we can potentially trade back into to then continue higher from it again, if that makes sense. So that's where I get involved. Expansion candles. CFD or futures really depends. Quite a lot of nuance, context going into it, in all honesty. Because for example, if you really want to swing trade, and again, if you swing trade only the futures, yeah, of course, it's arguably better to go for futures as well. But if you're in a position where I am, where you really swing trade as well, you like to hold through the close, etc., etc., then in all honesty, from what I'm seeing at this moment in time, and I could be wrong, maybe I don't have the experience or anything like that to know which prop firm would be good, but from what I'm seeing, then CFD prop firms are arguably better to go with, which is the complete opposite world. I know, but it's very odd, very odd. There's quite a lot of news, quite a lot of context going into it. Best thing you can do is also for your trading plan, just go with both and see, okay, this matches better with what I'm doing. This doesn't match great, and then from there you can make a better choice as well. Good luck, Luca. Good luck. Good luck. Take it easy with the risk management. Don't go crazy. Don't go crazy. Congratulations, Christian. Nice. Is Bitcoin going to drop to 98K? Your guess is as good as mine, my friend. Did you ever experience shiny object syndrome? Yes, for sure. For sure. I think we all do. We all do. In trading, but in general in life, I think you experience shiny object syndrome everywhere. Everywhere. Sure. I think that's what kept me from being profitable the longest, if that makes sense. Shiny object syndrome. That's why I hammer on about it quite a lot. What prop firms do you not recommend? There's probably, well, I don't really have a prop firm in mind that I do not, absolutely not recommend, if that makes sense. But yeah. I would just, I don't know. I don't really have one exact prop firm in mind that I would not recommend, to be honest. Don't really have one. There's probably prop firms out there that are very sketchy, etc., but I don't really have one in mind. Yes, I passed all the 7 accounts, correct. They were all copied, so essentially it was all the same accounts. It was one large account. That makes sense. All right, team. I'm going to end it here today. Thank you, everyone, for being here. I'm going to keep you updated on the Friday live session. I do hope we still have it. I'm going to be quite busy throughout the next couple of weeks as well, etc. So we need to see. We need to see. But if you're in the Discord, Telegram, or again Instagram, you'll see. You'll see. You'll see. Thank you, everyone, for being here. Take care. Thank you for the good questions. Thank you. I appreciate it. And then I'll see everyone at the next one as well. Thank you, everyone. Take care. Have a great rest of your weekend, or good night to you. All right. Thank you.